This is 95.3 Business Now.
Welcome back to Business Now. Foreign exchange issues such as fixed rates and capital controls are diverting remittance inflows from official to unofficial channels in Sub-Saharan Africa, and that's according to a recent report released by the World Bank. The Bretton Woods institution noted specifically in its latest migration and development brief that in Nigeria, the CBN's intervention in the foreign exchange market widened the difference between the official market rate and that of the parallel market on the liberalization of the naira back in June. Let's chat to this now with Ayomi Akinloye, an investment strategist and research professional. Good morning and great to have you on Business Now.
Thank you, Amide, for having me on the show. Always a pleasure.
All right. Give me your thoughts on the World Bank reports regarding Sub-Saharan Africa's FX remittances.
So, I think a lot of things that were outlined in the reports are quite valid. Yes, truly, Nigeria is one of the biggest, destination for FX remittances, same thing with the Sub-Saharan Africa region. And I think, based on the reports, they estimated, I think, roughly about 20 or 22 billion naira came to Nigeria, and then in total for Sub-Saharan Africa, it was not less than 54 billion. But the truth is, we are not seeing the impact on the FX market in terms of stronger exchange rate despite these influence. And the reasons are not far-fetched. They are basically what the World Bank highlighted in those reports. The fact that we still have significant, capital controls, and then huge intervention by the various central banks of Sub-Saharan African countries in the foreign exchange market, and then also the fact that we've had quite limited export push so far this year. That has impacted the FX market and has sort of increased the gap between the unofficial market and the official market. So people now prefer to flow in their remittances to the unofficial market because they get more value for their money. So, for example, in the Nigerian context, if you send $1 back home, you convert in the parallel market, you're getting 1,200. Whereas if you go to the official market, you're getting anywhere between 750 and 900, depending on the exchange rate on that day. So that is 300, 400 naira premium. When you now begin to factor in, some people send back as much as $1,000. By the time you multiply $1,000 by that premium of about 300 naira, then you can understand why locals prefer to use unofficial channels. So I think those are just the things that the World Bank was trying to highlight in that report.
So Nigeria accounted for $20 billion, as you've rightly noted earlier, out of the $54 billion remittances to the Sub-Saharan African region in 2023. What's driving the inflows?
Well, that's what's driving the inflows. Nigeria has a very rich diaspora outside, in foreign countries, in the UK, in the US, Canada. I'm sure we are very familiar with the significant migration, waves that we have seen in the country over the past few years. And we have quite a lot of citizens who are working in quite decent jobs and are able to earn decent wages. And it's just natural for a lot of Nigerians to send money back home, particularly for their dependents back in the country. So I think the fact that we have quite a thriving diaspora base outside of Nigeria has been the key driver of us being able to bring in huge amounts of remittances. You consider the fact that we have lots of skilled labor, and we export quite a lot of skilled labor, doctors, nurses, and things like that. That definitely strengthens the quality of our diaspora base and drives, the influence we get from remittances.
I think it's also important to look at what policy measures are needed, to encourage formal remittances channels and also ensure proper utilization of these funds.
Well, basically, to sort of encourage FX remittances through official channels, the CBN basically needs to remove the incentive for people to actually use the parallel market, because remember, the payment system is free, right? People can send dollars from the UK to Nigeria without needing the interference of the CBN or anything, because the payment ecosystem is free for all. Whereas the foreign exchange market is tightly controlled by the CBN. Yes, we had the so-called liberalization or unification of the exchange rate market, when in June thereabouts. But the truth is that is not true liberalization. True liberalization does not distinguish between one market and the other. So what we actually need to see is we need to see true liberalization of the foreign exchange market. Let banks be able to deal with the parallel market. Let the parallel market be able to deal with the banks. Let the CBN needs to reduce its stranglehold or its chokehold on the foreign exchange market and allow the market to actually operate freely, such that there will be a single exchange rate, not that we have a parallel market at 1,220 and we have an official market at 900. So let there be a single exchange rate, such that when you ask me what's the exchange rate today, it's just a single price. So it removes the incentive for people to go through the unofficial market. So that's what the CBN needs to try to achieve. Now, what can they do to achieve that? First, we need to improve our FX inflows. When we have adequate FX, naturally you will see that premium between the parallel market and the official market narrow, and then it makes it easier to integrate all the different participants in the market together, because everyone is now operating at a common price level. So I think that's the critical thing that needs to be done to improve our FX inflow, so that it will be easier to integrate all the foreign exchange markets together. But until we do that, we will not be able to achieve, attracting foreign exchange remittances through official channels.
All right, indeed. Ayorinde Akiloye, investment strategist and research professional. Thank you for sharing your insight with us this morning. Do have a great day ahead.
This is 95.3 Business Now.